According to supply managers in the 9 Mid-America states, how is the economy performing?
The manufacturers in the 9-state region, the Mid-America region, for the month of January was very solid. The supply managers reported a reading well above growth neutral, one of the strongest readings we've recorded since March of last year. And again, it's well above growth neutral. The reading was 57.2, and that's for January, compared to December's 50.6. So this isn't what I'd call in the solid range. Not remarkably solid, but much unexpected from my vantage point, and well above the number we're seeing for the national economy. Here I'll bring up a chart showing the national economy, national readings for the manufacturing sector compared to our Creighton University's, the Mid-American region. And as you see, it's well above growth neutral and rising again to its highest level since March of last year. The national number comes out later on this morning. I expect it to be up as well, but not to the extent we're seeing the growth in our numbers.
What were the hiring trends?
Overall, we saw some pretty good hiring, although not as strong as the overall number. The hiring number, the employment number was 53.8. That's for January. That's up from December's 45.6. Now that's a big expansion, but still only slightly above growth neutral. But December's number was the lowest we'd recorded in 4 years, so that's good to get off that very low reading. We're still seeing finding and hiring qualified workers remains the biggest constraint for the manufacturers in the 9 states that we survey. So it was, again, a good reading, indicating that all of a sudden we're beginning to see hiring in the manufacturing sector. And of course, you tack on some of the good numbers at the national level, some of the good economic indicators. So I'm in the positive, more optimistic about the regional economy and the national economy.
What impact is inflation having?
Inflation remains modest at the wholesale level. Our price gauge for the month of January was at 58.8. Now that's above growth neutral, but still indicating only modest inflationary pressures. That's up from December's 57.6. But very important, the Federal Reserve last week met and indicated they're on hold in terms of raising interest rates. So if we saw excessive inflationary pressures, that would be a concern for me that the Fed might have to move to raise interest rates. We're going to still see interest rates remain in a very good, solid range and low by any measure, by historical standards. Low short-term interest rates, low long-term interest rates. Until we see inflation tick up significantly, that's what I'm expecting from the Federal Reserve over the next few months.
What impact is trade having?
The President signed USMCA, that's a trade agreement with Canada and Mexico. That is very positive, and we asked the supply managers about that. We asked them also about the President signing phase 1 of the trade deal with China. Both those factors were very positive, and we asked the supply managers what would be the impact on their firms. 63% indicated that the signing of these 2 trade deals would be very positive for their companies. 37% on the other hand said it modest to no impact. So it was a good month in terms of trade, and trade has been the big factor restraining growth for the Mid-American economy. One third of the companies indicated that they had switched or changed vendors because of the trade war that's been going on. So this would be a very positive factor going forward. Trade has been, as I said, the biggest negative factor restraining growth for the manufacturers in this part of the country. The trade numbers for the month of January were more favorable. For example, export reading was 52.1. That's up from last month's 43.5 in December. And that's one of the first readings we've seen above growth neutral in several months. That's very strong, or very positive, I should say. The import reading was 46.3, weaker than we'd like to see. That's down from December's 52.0. But when you look at it in total, trade now is looking much more positive, apt to have much more of a positive impact in the weeks and months ahead for the regional economy.
What does the Mid-America economy need?
It's much like in previous months. It's much like the rest of the nation. With very low unemployment rates, we're seeing finding and hiring qualified workers, especially skilled workers. We're seeing that, And we're seeing it boost wages. Wages are now growing for low to middle earning wages, middle earning income workers. We're seeing that moving more positive, or more in the 3 to 4% range, as opposed to 2.5 to 3% for workers in the higher income range. That's the number one factor restraining growth in the regional economy. The trade peace will be another factor we need. We need trade peace. We've seen it now with the signing of USMCA, with the signing of Phase 1 trade agreement with China. We need to see that continuing. We're seeing some rumbling in Europe about trade restrictions, and the president's talked about raising tariffs on European nations, imports from some European nations. That would be a troubling change. We need to see trade peace. A third thing is, on Friday of last week, the UK exited the EU. That continues to be a real big, important issue. That needs to go smoothly. Smoothly meaning no spillover ramifications. Now, if you do, we see that could be a real problem for internet companies that deal heavily in international sales of international goods. Global economic growth, we need to see that. That would be a very, very big positive for the regional economy going forward.
What are some areas of risk that we need to monitor?
Well, I don't like to mix politics and economics together. Politics usually wins out over economics. We've got the Iowa caucuses, of course, this evening. We've got the New Hampshire primary coming up. We got the Nevada primary coming up, 3 right in a row. There are some of our candidates on the Democrat side that are arguing for socialism, at least more intrusion of the government into the business lives, into the lives of businesses, the lives of individuals. Be very negative for the overall economy. So we'll have to cross our fingers and hope more modest heads prevail in terms of that. So that's, keep an eye on those elections. Then we've got the coronavirus, big issue. We don't know exactly how this is going to play out. The SARS virus in 2003 had a big negative impact on the overall economy. That could really put a dent, a short-term dent in the regional economy, and particularly, again, trade's been very recently a positive factor. We want to see that continued. So that's something to keep an eye on. Indicators. Yield on the 10-year Treasury. That's the interest rate, current interest rate, market rate on 10-year U.S. Treasuries. And now, why to keep an eye on that? That's a big indicator of risk. When global risk rise, that yield comes down. That yield's now in the 1.6 to 1.7% range. That's a pretty good range. If that should dip to, say, 1.4, 1.3, something's going on and it's not good. On the flip side, if it should rise up to 2%, what that's indicating is lower risk, but higher inflation, potentially higher inflation. So in the range of 1.6 to 1.9, that's in a favorable range. So that's something that we need to keep an eye on. Jobs report comes out this Friday. We need to see a number that's, say, above 150,000. If that's a weak number, meaning something below 100,000, that would be have a negative impact on the stock equity markets, have a positive impact on bond markets, but keep an eye on that. That same employment report, watch the wages underneath the overall jobs report. We're seeing wage growth moving a bit lower, the growth in the number. We need to see year-over-year wage growth in the range of 3 to 4%, even above 4%. That would be very positive. Unfortunately, I expect it to move below 3%. The number has been a bit weaker lately, a real concern out there. So those are the factors, indicators, the economic indicators we need to keep an eye on over the next month, or that's for the month of February.